What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down why under the next week is going to be very significant for the markets in Tesla because we do have some very big data coming out, which is CPI on Tuesday. So I do believe there's going to be a big peak in volatility. So I'm going to break down how this may affect Tesla's share price, what's going on with the overall market, what's going on with the news affecting Tesla and Elon Musk, and what the data is telling us about both the market and Tesla. Now, before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 5 free stocks with free level 2 data with $0 in trading commissions. It's a limited time offer. The offer ends in just 4 days. Make sure you check it out before they run out. With that out of the way, let's get on with the video. So Tesla is actually down about 5% for the day. It actually underperformed both SPY and NASDAQ, both the S&P 500 and QQQ. And this is very important because of the fact that now Tesla is actually really starting to cool off. And the doji candle I showed you yesterday did mark a maybe like temporary top on Tesla and maybe even the top of this rally that we are seeing. Now, whether or not this rally continues, it's going to heavily depend on CPI, in my opinion. And I think that it's not just for Tesla, but the entire market going forward. So CPI is coming out next week on Tuesday. Be ready for the inflation rate to come out. Core CPI is also going to be very important. That's CPI without food and energy. The Fed does not have much control over energy and also food, and that's the reason why this is also going to be looked at under a microscope as well. Now, I do want to note that the data is very manipulated, so I don't fully trust the data to be the most accurate thing that comes out, but it is widely accepted, and this will actually have a big effect on how the market moves. Now, we also have 2 Fed speakers on that day, so I do expect there to be lots of volatility and lots of hedging right before the day comes. We have another Fed speaker in the morning right before the day before. And that's also going to be important because these Fed speakers could cause the market to pump or even come down a bit. Now, today was very interesting because we had some consumer sentiment data that came out, and also we had 2 main Fed speakers. We had Harker and also Waller. And I would say that Waller was kind of in the middle, maybe a little bit more on the hawkish side, but Harker was quite dovish. He actually said some things about the soft landing becoming very likely. Now the Fed is making lots of progress, and the market ended up actually pushing up a bit when he said that. But Tesla was actually underperforming. So I will break this down from a technical standpoint in a couple of minutes, but I would first want to talk about the news and the context of this situation. If you're not interested in that, you could just skip the video to the part where I get to the technicals. But before I do that, let's talk about some news. So there was a lot of talk in 2021 about a fatal crash that took place involving the Model S. This was under investigation, and it actually just came out that Tesla's autopilot was not the cause of the crash. This was determined by the National Transportation Safety Board, and that's actually technically good news for Tesla investors. Now, I don't want to be biased when I say this. I do believe that the full self-driving technology and many of the other driver assist features of Tesla, they do have these different nuances, right? They're not completely perfect. I do believe that the driver assistance features tend to be relatively safe, but the full self-driving technology is still a beta. They're still working on this, so I can't expect that to be perfect. However, what I will say is when you look at safety ratings, Tesla was ranked as one of the most safe cars in the UK, one of the most safe cars in all of Europe, according to many different administrations. And that's important because they're still very safe, and we can't always throw them under the bus when there are accidents, especially when you compare them to most other car brands out there. They're very safe. The full self-driving hardware 4.0 has been approved in Europe for the new Model S and the Model X. This is very good news because more individuals are going to be exposed to this technology and the autopilot control. Now, it is important for these drivers to be very safe and very careful when they do end up using it. But the good thing about this is the new computer that deploys and operates technology that's so important for the cars, it's going to be more widely available in a sense. And this power doesn't just let more and more people use it, but what's good about it is more and more people could help Tesla learn from this mistake, the different things that could come on the roads and actually improve on a daily basis. And that's the real big importance of their supercomputer because it's constantly learning on a daily basis. Now, when it comes to Model Y inventory levels, I want to note that there has been a big increase just today. So it could be because a lot of cars were produced and now they're kind of uh, leading to a bit of a backlog. But it could also mean that demand slowed down just a bit. Not a guarantee though, but it is a possibility. So I just want to carefully watch this over the next few days to see if this continues to rocket to the upside or if it starts to come right back down. We'll just have to wait and see. But so far, these inventory levels are still very low relative to these peaks we saw in like December and even early January, right before they ended up announcing the price cuts. So I'm still keeping a very close eye on this. We'll just have to wait and see how this goes. And until then, it's just a game of patience. Now, Elon Musk did put this on his Twitter page. Basically, Tesla was ordered to halt construction of the parking lot's solar array in Giga Berlin, and Musk responded with a sigh. Excuse me, sorry guys, a big sigh because of that. And I consider that not really the best of news for Tesla employees out there because of the fact that this is just slowing down their progress. It's really slowing down a lot of the things Tesla wants to get done. And all they're really doing is trying to build solar panels for the parking lot. I don't really consider that a bad thing. If anything, it's actually going to be beneficial for the Gigafactory and even the environment technically. And it looks like there are many of those activists out there that are playing a role in this. I haven't looked into the full details of their arguments. I know that they believe that this is going to lead to more pollution and other things like that. But the bottom line is this is slowing them down a bit. It's not the end of the world, but it's really, really, really taking off a lot of Tesla investors and also Elon Musk. So we'll just have to wait and see how this goes. I'm sure they'll get over this quickly, but the same thing happened with the Giga Berlin construction. Anyways, going back into the options chain, there is one thing that's good about Tesla, and that's the fact that the put to call ratios are still very close to one. It becomes a little bit, uh, it kind of diverges a bit by the time we get to March, and that's because there's actually more calls during that time period. But because the options chain looks like this, there's not as much of an incentive for market makers to manipulate the stock to the same degree as others. And we did end up closing just below max pain, and that's looking like it's the trend in this market because SPY ended up doing something very similar. It closed just below max pain, and we saw this for many other tickers out there. Now, for Tesla, it was on this nice uptrend. It still is technically on an uptrend. It's not officially like invalidated just yet, but I want to note that the price price ratio is starting to decrease a little bit. This means that Tesla is weakening a bit. And this often happens because of some buyer exhaustion. There could also be the element of manipulation. But what's interesting about it is we're not seeing short sellers playing the biggest role in this because we're not actually seeing a big increase in the short interest. So it's not necessarily the shorts who are like driving Tesla down right now. It has more to do with exhaustion, in my opinion, and maybe some other news about the collective market affecting Tesla. And that's completely normal. When stocks run very hard in very short periods of time, it's completely normal to have a bit of a pullback. And I do believe this is what Tesla is starting to experience. Now, whether this pullback becomes much larger or not, I believe it's going to depend heavily on CPI. And what else is worth noting is, on Fridays, Tesla had a tendency of being a little red. So that is what ended up happening today. But Mondays tend to be green days. Once again, not guaranteeing it because Mondays also tend to be reflections of Fridays. But there is a good chance that Tesla could have a decent sideways, maybe even a somewhat green day on Monday. I just don't know for sure, depending on news over the weekend. But it also depends on what level of hedging is going on in the markets. Because now we're entering this stage where the markets are getting ready for the big CPI event. And when they do this, we're likely going to see a lot of hedging, which often leads to very choppy sideways action, maybe a little bit of downside. That's what tends to happen. But what's interesting about SPY is we were basically trading sideways throughout almost all of the day, basically red almost for the entire day between 405 and 408, which is the key resistance I mentioned yesterday. And what's interesting about it is, yes, we were trading sideways, but we managed to push just above 408 into close. And that's because of the Fed speakers that helped pump the market. We also got a bit of a push up by the market makers because of the fact that there was a lot of over leverage on the put side. So that's the main reason, in my opinion, why SPY and the S&P 500 closed kind of green. I also believe that there is some more potential. There's an increased probability of us trying to get to this 410 level, but resistance right here is going to be very tough. I don't expect us to make a huge move to the upside. We could try to tag like 410, maybe trade kind of sideways. I'm kind of seeing that, and I think the market is just getting ready for CPI. Now, for the QQQ and the tech sector of the market, this is actually underperforming. And this is heavily driven by both Apple and Tesla. Both of them were quite down today. We did try to push up at the very end, but we also broke a major support zone. That's the 300 level. So the QQQ looks a little bit weaker than SPY. I think tech is starting to slow down. And right now, the market's just waiting for the data. I think that's like the big thing right now. And we're just going to continue to trade kind of sideways until then. On the daily chart on SPY, I forgot to mention this, we just got a crossover on the MACD. This is typically a sign that the momentum is just dying out and the bears are gaining the edge over this stock, and it's likely going to continue this way in the markets. Once again, it does depend on CPI, but if it wasn't for CPI, if we just ignore that, what would have happened was the technicals are basically telling us that the market's going to likely drop, at least as of right now. This could change depending on the data, but it seems a lot more probable that that's going to happen now. Looking at the VIX, we do have a confirmed breakout now. We did tag almost 22, came right back down to 20. We could actually see this thing come down to about 20 and try to bounce again, or even try to retest the top of this wedge and then bounce. But overall, if you look at what the trend line and the technicals are showing us, we're most likely going to see the VIX fly to at least 22.64, then all the way up to 25 or so. It seems very likely that's going to happen when we get breakouts like this, right? It's very likely that's going to be bearish for the stock market. Is it guaranteed? The answer is no because of CPI, but it is still very possible, and I want everyone to be prepared for that. Another bearish outcome for the markets is the dollar index. It did something very similar to what I thought. I thought we'd get a push up and then like come down a little bit before getting a nice bounce. We came down a bit, but not as much as I thought. Now this thing is just continuing to respect an uptrend. We should see this thing at 105 very soon. It's most likely going to happen, if I'm going to be frank with you, which means the market is most likely going to see some downside. I'm not promising it. I'm just saying it's very likely, seeing the VIX and the dollar breakout. This also has to do with potentially higher inflation readings than what the market would have wanted. That is very possible as well. There's an increased probability of high inflation. I know Apple was lagging throughout the day, but it actually got a last minute push to close a little green. Apple is near a crossover, and there's both a bullish and bearish formation at the same time. Once again, it's in the middle, trying to decide based off CPI. I'm saying this because we do have a potential bullish triangle that's developing on the hourly time frame, which means Apple might try to get a break to the upside. But on the bigger time frame, on the daily, we're getting much weaker momentum, and we're also respecting a much larger kind of distributive like structure, right? And you're actually seeing Apple starting to curl in this direction, which means it could actually reverse very soon to the downside. We also have this gap down here in the 140s. I expect that to get filled if CPI ends up hot. All right, and that seems a little bit more likely given what the data is telling us. I will go over more data in the future. So what does all this data tell us about Tesla? The bottom line is, I think Tesla's just cooling off from the massive, rally it had. Completely fine. It's not the end of the world, at least as of right now, in a way. And we had this basically nice channel, or like this trend line Tesla was in. It still technically is respecting support, hasn't really broken out yet. And I really believe that Tesla is mainly going to just trade this a little bit sideways and may even downtrend a little bit more, but it's just waiting for CPI. I think that's what's most likely happening. And I think it's trying to cool off a bit. There is a possible head and shoulders like structure that might be developing. So if we do get a bit of a bounce on Monday, we could be forming a head and shoulders and getting ready to come down lower. And you could even argue that this is resembling a bear flag, and this thing is going to likely push up a little bit more and then get another big rejection. Right now, if you are a bull, you're going to be watching for, I believe, first you want to see this thing break 198 to 200. If it does that, then we have this gap up here. It could actually fill this gap if you are a major bull. That's what you're going to be watching for. But first, it has to break above 200. If you're a bear, you're going to be watching Tesla get a retest of this trend line, maybe down to the 192 level. And if it breaks below it, this thing could quickly start to test 189 to 190. That was another stronger support area. And you could see this is where Tesla bounced previously. So the Bears are maybe aiming for it to come down to 190. The Bulls are aiming to see this thing break above 200 and maybe come all the way up to this 205 level. What is most likely going to happen? I don't really think it's going to be that insane. I think that on Monday it's going to be a little bit choppy, a little bit sideways. Not too much will likely happen. At least that's what I'm just predicting. At least as of right now, my prediction could change on Sunday depending on data. But I am seeing this not maybe doing way too much for the time being. I think we're just getting ready. We might try to get a break to the upside because I am seeing some potential for SPY to try to get to 410. Tesla might try to get back above 200, but if it fails, if it gets a big rejection and the bears start stepping in, then we could actually see this thing get smacked, right? I'm not seeing it as of right now, but it could change. And the reason for that is because when you look at the short interest, right now, the shorts piling in and trying to smack Tesla down is not what's playing the biggest role as of right now. We're not seeing excessive levels of shorting. If anything, the short interest ended up dropping because of the rally. So what I'm thinking is if Tesla does pop a little bit, there is a possibility that some more shorts might try to pile into the stock and try to smack it down. There is a possibility. So I'm going to be watching the short interest very carefully. All right, especially going into CPI. They might try to start shorting this thing up top and maybe try to get some good positions around this zone right here. It could be a trap by the market makers. You have to be very careful. But if anything, guys, I'm not too worried about Monday. I don't care if Tesla comes down a little bit. I don't care if it goes up a little bit. I don't care too much about Monday. What's more important is CPI. Once the data comes out, there'll be a lot more clarity about what the market is likely going to do. So we just have to be patient. And until then, that's what I have for this video. Thank you all so much for listening. Please have a great rest of the day. I know that the odds are technically favoring downside in the market and that could drag Tesla down. It's a little bit more likely that that happens, but we need to see more data first to get confirmation. And we're almost there. We just have one full trading day left on Monday before the data comes out before the market opens on Tuesday. So just be ready, be very patient, be very careful, and I'll see you guys in the next one. Tesla to the moon because the long-term future is still incredibly bright, and peace out.